welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. The next 1 hour will take you through all the global and domestic cues that you need to watch out for and also tell you about the stocks that you need to keep on your radar today. But before that, let's get started with an eye on the globe. And Srishti, what a day on the Wall Street yet again. It highlighted a split in the market performance with technology stocks. They were lagging while value-oriented sectors like healthcare, they led the gains yesterday. The rotation into defensive and cyclical names that brought some relief to investors hoping for a broader market rally, but it also reflected growing caution towards high-risk tech assets. Now, if you talk about indices, the Dow Jones Industrial Average that climbed to a record close of 48,000 yesterday, making its best week since late June. The S&P 500, on the other hand, slightly edged higher, extending its winning streak to a fourth consecutive session, whereas the Nasdaq Composite, that ended in the negative territory as large-cap tech names, they retreated. Now, market sentiment, that was buoyed by optimism that the historic 6-week US government shutdown could be nearing an end. Now, market majority leader Steve Scally said that the final vote on the compromise funding bill could take place yesterday before the market, after the market closed, and that it is being hoped for a resolution that it would restore access to key economic data. Now, remember that analysts are noting that the market has rebounded from the April lows, and it has been a broad-based rally that we have seen. The broad-based recovery is what we have seen on the Wall Street. Now, while the White House is warned that the shutdown may reduce fourth quarter GDP growth by about 2 percentage points, most of the economists are expecting an overall limited impact to remain. So yes, that's about the Wall Street. Yet again, mixed moves is what we saw on Wall Street yesterday. But Srishti, how are things on the crude front?
Quite exciting, Kanishka, because the fact that we have seen crude falling almost 3% just yesterday, it was seen to be hitting lower levels when it comes to the Brent oil, as well as the major commentary coming in from OPEC as they revises the outlook to show the supply surplus. When let's tell you what OPEC has actually gone ahead and said, because OPEC now expects the world oil market to face a small surplus in 2026, marking the sharp shift from the earlier deficit forecast. Now, the group's latest report shows the OPEC Plus output to 43.02 million barrels per day in October, with demand next year projected just slightly lower. The surplus of about 20,000 barrels daily comes as OPEC Plus and other products ramp up supply. Now, meanwhile, the IAE forecast a far larger glut of around 4 million barrels per day, highlighting a widening divide in the global oil outlooks.
All right, so that's about Wall Street and how the oil market is faring. But
if you like this video, then like, share and subscribe to ET Now.